Inflation's cooling off, but the Fed's not flinching. Last week's inflation data came in better than expected, and markets loved it. But heading into this morning, the Fed's still sending mixed signals on the Fed rate cut. So what does that mean for buyers and sellers this summer? Let's break it down. Welcome to this week's Win Wednesday. It's our What's Important Now market update, where hopefully I help you stay ahead of the curve and win in any market, no matter what happens. The last Wednesday's CPI report showed inflation rising just 0.1%, half of what markets expected. Thursday's PPI, Producer Price Index, echoed that trend with wholesale prices up just 0.1% and core inflation softening too. Mortgage bonds rallied both days, giving us a float bias heading into today's Fed meeting conclusion. And just yesterday, softer retail sales and falling factory activity reinforced that inflation pressures are cooling, not heating up. That's good for interest rates. Other good news for buyers and sellers. Fannie Mae still forecasts 3.4% home price appreciation in 2025 and 19% growth over the next 5 years. That's not bad. So if you're under contract and you haven't locked yet, your lender should consider floating through this afternoon's Fed announcement. Unless yields spike sharply, you've got room to watch and see what happens. Now, if you're selling, don't fall for the gloom and doom. Redfin claims there are 1.9 million active listings, but Realtor.com and the National Association of Realtors data show about half that number, many of which, hundreds of thousands, are already under contract. So don't panic, but don't be greedy. Price reductions are happening and the market is shifting back to buyers. Make sure your marketing is aligned with the market. It's easier if you work with a top real estate professional to price your home right and create a winning strategy. So if you want a referral to one, drop a line in the comments. But regardless, if you want to stand out in this market, get strategic with seller concessions. If you're looking for ideas, check out our past videos on buydowns. It has really been working. But here's your weekly money tip. Regardless of what's going on, buyer or seller, think beyond the rates. Use this commerce stretch to check your credit, reduce revolving debt, or get a second opinion on your budget. Even a small change in your debt to income ratio can open up doors to better loan terms, especially on jumbo, and a smoother path to home ownership. Right now, we're in a wait and see phase. Inflation is softening, but the Fed is still nervous. That creates a lot of short-term volatility, but also long-term opportunity. Your edge, as always, is being prepared. Get your fast track approval, dial in your must-haves, and build a financing strategy that works whether rates drop or hold steady. The buyer who wins this summer, they're not waiting, they're ready. I'm curious, what would make you feel more confident about buying in today's market? Is it lower rates? Is it better pricing? Maybe more clarity on what the Fed's doing? Drop a comment below. I'd love to read them and respond. Wherever you're at in the process, let's connect to make sure you're offer ready. Stay tuned, stay ready, and as always, be the Buffalo. Thanks for watching, and I'll see you next week.